Good morning. Thank you for attending. As you are aware, HUD properties are a prevalent part of our inventory today. Selling HUD properties is a different process, and our goal today is for you to learn that process from an expert. Our expert today is the president of HUD Home Network, a management and marketing firm with the U.S. Department of Housing and Urban Development. They have been involved in the disposition of government-acquired properties, assets for the past 19 years. It gives me great pleasure to introduce to you the president of HUD Home Network and the hardest working asset manager I know, Jason Mitchell.
Good morning. How's everyone doing? Fine. Good. Can everyone hear me okay, first of all? Up a little bit? Up a little bit. Okay, yeah. First of all, I would like to thank Jasna and her team at Hoyt Real Estate for sponsoring this event. I'd like to thank you guys for coming out. Like she just mentioned, my name is Jason Mitchell. I'm the president of HUD Home Network. We also do business as H.H.N. and Associates. Like she mentioned, I've been around a long time. We've seen a lot of changes within the disposition of these HUD homes. And what I'm going to do this morning, I'm going to, try to enlighten you guys and some others try to, bring back some memories to try to get you guys more involved in selling these homes, And what I like to do, first of all, I like to just start out with a little brief history. During 1934, during the Great Depression, as you can all mention, it was imagine it was very, very tough during those times as far as getting on mortgages and purchasing a home and keeping homes. Well, what the federal government done, they implemented FHA, Federal Housing Administration, through the National Housing Act. What FHA does, and it have been doing since that time, they've helped over 34 million people become homeowners through insuring mortgages that private lenders make. And not only insure single-family dwellings, but also insure multifamily dwellings and healthcare facilities. When I'm speaking of single-family dwellings, I'm speaking of dwellings of 1 to 4 units, and that's what we're going to be talking about this morning. HUD is also involved with multifamily, which is anything over 5 units, but we're not going to be involved in that. But if you do want to know more about the multifamily dwellings, just go to HUD.gov and just click on multifamily, and it's a lot of information there. During 1965, HUD, the Housing and Urban Development, was created. HUD is a division of FHA, and what HUD role is, HUD primary function is to help to combat discrimination, help with homelessness, also to help revitalize communities, and also affordable housing. HUD do this through various programs. I mean, HUD has a lot of programs and more programs coming out each day. But what we're going to be talking about this morning, we're going to be talking about some of the programs that's involved with the HUD home. And most of you all know, I'm sure, but I'll give a little elementary what a HUD home is. A HUD home is a house that which someone had an FHA loan on it. For whatever reason, the purchasers stopped making their payments on that home, and the lender foreclosed. HUD don't do any foreclosing at all. The lender foreclosed on the property. When the lender foreclosed on the property, the lender has an insurance policy with HUD, so it comes after they get the insurance money that the borrowers, the lenders do, it comes back into HUD's inventory, and that's where you guys come in at when we resell the properties, okay? So what I like to do, first of all, I like to let you guys know I'm not the type of instructor presenter who like to sit up here and talk for 2 or 3 hours just to hear myself talk. I've been doing this a long time, but if you would give me your feedback, please raise your hand anytime during this presentation. You don't have to wait to the end. Raise your hand and ask me questions, because some of you guys, I know you've heard this over and over again, so I'm going to really lean on you guys to ask me some questions or make this more interesting, because it stimulates my mind. Because like I said, I've been doing it a long time, a lot of stuff I forgot. But if you ask me a question, I probably can think of it, So just feel free to, at any time, ask me some questions. For the ones that's been here for a long time, been involved in this program for a long time, and want to know what some of the changes has taken place. And let me say this first of all, what I would like you guys to know is to leave here knowing HUD don't do any negotiation. That's the first thing you need to know. If you're working with a purchaser and they says, okay, if you can get the seller to do this or get the seller to do that, I'll purchase this property. Let them know, first of all, it do not work like that. Whatever HUD says go, that's what go. Okay, so long as you know that, it's gonna make it easier for you to sell these homes. A lot of agents, what they do, they won't sell a HUD home until a prospective purchaser will come to them and start asking them about a home. And then once they find out it's a HUD home, they'll be like, oh man, it's a HUD home, but I'm gonna go ahead and try to sell it anyway. And the reason they feel that way because they don't know the rules of the game. What you got to do in order to be successful at selling these homes, and it's a lot of real estate agents is making some good commission checks by selling these homes, is to know the rules of the game. And every area is different. So, you know, if I say something you feel like it do not apply to your state, please forgive me, but I'm not naive, but with this presentation I do it throughout the country. And I realize in Michigan it's a totally different ball game. But you know, what you guys do, you guys can get yours off of volume though, because I mean, you don't have any $300,000 or $400,000 HUD homes like some of the other states do, but you got right now about I think about the 5th, 6th largest inventory of HUD, not just HUD, REO properties throughout the country. So if you get your game plan together, and I'm pretty sure a lot of you are already doing it, it's the ones that you can do it, make some good commission checks by selling these homes on volumes. I know real estate agents selling 10 of these homes a month, you know, and it's just that much volume there, you know. But the changes has taken place. It used to be to where it was one property management and marketing contractor. M&M's, you might hear the acronym M&M. M&M stands for Management and Marketing Contractor. In 1999, HUD started using private companies such as ours to assist them with the disposition of these homes, and that went on to 2004. 2004, that's when M&M 2 was created, and then in 2010, we're in M&M 3 now. Okay, but it used to be where one contractor was involved in every facet of it, but now it's been broken down. It's been broken down to where it's multiple contractors now. And I'll let you know what they do. Yes, sir.
How long are those contracts, Jason?
The contracts are for 5 years. Well, actually, it's a 1-year contract with a 4-year option extension. That's what they are. Okay, and that's for the FSM, the AM, and the MCM, and the OM. Those are the 4 contractors involved with the disposition of these homes right now. Okay, the other change that's taking place is HUDHomestore.com. That's one official website that everybody in the whole country can go to, find these homes, and to sell them. That's where the general public will go find these homes and go to you guys and ask you guys about them. It used to be to where every management company had their own website and we marketed them that way. Also, you can put these homes on your website. If you follow the guidelines that I'm going to tell you what to do this morning, you can advertise on your website. There's a new bidder registration process. It used to be where we brought these homes to the market only once a week or either every 10 days. But now we bring these homes to the market every day. Every day. And timing is very important. I mean, it's like the stock market. If you know, the brokers on Wall Street, they watch their stock market every day. In order for you to be successful in selling these homes, you got to watch it every day because it changes. The inventory changes every day. And you can miss out on a lot of sales by not watching it closely, or either not dotting your I's and crossing your T's, have these emails coming over to you each day. And the bidder registration process I'm speaking of is on the website, you got to register one time. Okay, first the primary broker registers. Broker record registers first. After that, his or her agents can register. It's a one-time process until your real estate license expires. When your real estate license expires, you're going to have to renew that. Okay. A lot of people get that confused with the NAID registration. And NAID is an acronym, Name and Address ID number. That's the number that the federal government used to track where the funds are going, who's getting paid off selling these homes. That has to take place once a year. That's annually. So if you're the broker, you need to make sure that you register each year to be able to sell these homes. And because you don't want to get to the point where someone will call you and you find out it's a HUD home and you're not registered, because you cannot sell it without an active NAID number. The good thing about it right now, the NAID number is coming directly from the Home Ownership Center. This one will be coming out of Philadelphia, and it takes about 2 to 3 weeks right now. So that's good, because it used to take about 8 weeks. So, but you want to try to keep that anniversary date in mind, where you won't miss out on the sale. Exclusive owner occupancy priority period. The program is designed to help create home ownership and stimulate the economy. But the federal government knows that investors are a big part of this program. So the investors, they're going to have their opportunity. So please bring your investors to the closing table. But you will always find that the person that's going to live in the home, it will always have the first choice, first shot at it. okay? But once that exclusive period goes away, it doesn't matter then. It's all about line number 7, net to HUD, who have the opportunity to purchase the property. The field service manager, FSM, you might hear them called, what their duties are, they do the routine maintenance of these homes, they do the inspections, they also do the repairs. But when I'm saying repairs, now keep in mind, these are repairs that for hazards and safety issues. These are not repairs that your purchaser might want to come to you and say, okay, if the seller were to put an air conditioning unit in there, purchase this home. Those are negotiated type repairs. HUD don't do those type of repairs. So that's the number one rule you want to let them know. It don't work that way. Yes, sir.
Who are the field managers?
The field service managers are 3 companies that said we're in Michigan right now. I think AMS is one of them, Asset Management Services. I can't remember the other 2, but what you do, A-Sons is another one.
I have no problem with them.
Okay, this is what you do. Anytime.
Them who stealing stuff.
Okay, anytime you have a problem with one of the managers, let someone know. Okay, and with the part about what you're saying about as far as people stealing.
I go in there one day and everything's there. I go back the very next day, the neighbor called me. Hey, it's a guy here. He's taking the furnace. He's taking the hot water tank. And I get over there and they just left. I had one because I had to chase him down. Took the license plate number. Called me like I was the cops. And I go through this a lot. It's there the day I go to list it. The next day I go to put the lockbox and sign. They say a guy with a hood truck is here. And everything's gone.
Got with a hood truck. Yeah, like I say, unfortunately, guys, you all know it's crooks in every business. So what you all have to do is you guys got to be the eyes and ears. If somebody out there doing something wrong, you got to let someone know, because we got to get these guys. If it's people out there doing that, we got to get them out of the business, because it's making it hard for everybody. Very hard for everybody. That's a good point. Yeah. But like I said, no negotiated repair. Okay, the AM, asset managers, that's what we do. Our duty is to select listing brokers, to monitor the selling agents, and to oversee the closing agents to make sure HUD's funds are accounted for. The basic overall marketing and selling these homes is what we do. This is a contract area map of the entire country, and it's broken down into regions. And so as you can see, it's a small amount of companies involved over the whole country. So what we do, what the FSM do, is to use subcontractors. Okay, the FSM, they use local companies to go out, cut the grass. They might be doing the stealing now. Anyway, I don't know. Anyway, they use local companies to go out and to do their maintenance of these homes. Some of them they do their own, have their own crews go out, but most of the time they do use subcontractors. We depend on you guys, the real estate community, for getting these homes sold for us. I'm going to talk with you a little while about some of the program that's involved with the disposition of these homes. The first one is the NSP First Look, the Good Neighbor Next Door program, the REO discount sales to nonprofit and government entities, the $1 HUD home sales, and the ACA programs. And these programs I'm going to talk to you about, I'm going to tell you to inform you, but the reason why I'm telling you is because you can get involved by partnering up with local municipalities and with nonprofits to be able to sell these homes once they become the inventory of another entity, because they're not in the business of rehabbing and selling homes, but they can get the grant money. Unfortunately, an individual cannot get grant money from the government. Only someone can get grant money is a nonprofit, a local government, or a faith-based initiative, a church. So, and by the way, I mean, the markets are tough right now. You got to think outside of the box, and a lot of real estate companies are doing just that. You can have a nonprofit within your real estate company if you choose to do so, but it's got to be kept separate. All the paperwork, the office space, the phone, everything has to be kept separate. And it's really a smart idea for the ones that's doing it, because all these people that's losing their home that need help, if they're there to help them, when they get back on their feet and go through their storm, guess who they're going to go to? They're going to go to the people that was there to help them to be able to purchase their next home when they start back working. The NSP First Look program, this program was implemented in July of 2010. The way it works is the it was a grant money that was given out to nonprofits and the local governments to be able to buy foreclosures and abandoned homes, and they can do so before these houses actually come on the market. So you guys don't even see these homes, a lot of them, because they get sold to them. And what they can do, they can purchase any HUD home, or not necessarily a HUD home, any foreclosure or abandoned property at a 10% discount. And Habitat for Humanity was one of them. They're one of the big players in this particular program right here, and it's others, you know. So if you know some people that's got some the grant money, you know, you need to try to partner up with them, because what HUD is doing, HUD is pushing us to go to these grantees, the people that was giving this grant money, and say, hey, guess what? You guys got to start using this money. If you don't use it, you're going to lose it. So the money is there. So, but a lot of them, they're not really they got this grant money, but that's not their sole thing to which they do as far as involving housing. They're involved in a lot of other different nonprofit type activities, but that's where they need you guys to partner up with them to help them to spend some of this money. The Good Neighbor Next Door program. This one here has been around for a long time. This is where a police officer, school teacher, medical emergency technician, or firefighter can purchase a HUD home for 50% discount. That is correct. If the home is $100,000, they can purchase it at a 50% discount. And let me say this, because most of the time, the first time I mention this program, someone will raise their hand and say, but we can't get, the HUD won't pay us for selling these homes. That's correct. HUD will not pay you for selling these homes, but you can sell these homes and get a full 6% commission. What you have to do, you have to get a separate addendum with a separate agreement with your purchaser and let them sign it stating that you'll be able to get 6% of the proceeds of the sale. So they don't have to come out of their pocket with the funds, but they will have to pay you because it's going to be a part of their loan amount. So basically, in other words, instead of them getting a 50% discount, that 6% is subtracted away from that. Okay, and they're not going to have a problem with it because they cannot purchase the homes themselves. The general public cannot purchase a HUD home. They have to go through a HUD-approved broker or their agents. Okay, but the way this program works, if a HUD home is in a revitalization area, first of all, it's not just any HUD home. It has to be in a revitalization area. They can purchase these homes, and they have to live there for 3 years in order to be able to get this 50% discount. It's prorated out. If they move out prior to their first year, they get it at a 90% discount. Yes. The way it works, first of all, let me say, they give a promissory note to HUD for 50%, and they make payments on the other 50%. So if they move out prior to their first year, they pay back 90%. Prior to the second year, they pay back 60%. Prior to the third year, they pay back 30%. But if they stay there for the entire 3 years, they do not have to pay the secondary note off. So it's a really good program. One of the drawbacks is that they cannot have a residential dwelling in their name, nor their spouse. It's a one-time process. They could have owned a home. They don't have to be a first-time home buyer, but they could not have had a residential dwelling in their name for the past 12 months. Okay. They can get an interruption within that 3-year time period. Just for say, for an example, if they're in the military and they're deployed, they can't live in the home, so the HUD will approve them not to live there, and there are some other exceptions where they do not have to live there. And a lot of people will ask, well, why these professions? Yes, ma'am.
Is there a map or a location for the revitalized areas?
Yes, ma'am, it is. It is a map. And what you want to do, you might want to Google this. I got a slide. I'm going to mention that in just a moment, but you might want to Google REO Locator. REO Locator. This is a tool which was implemented only a few months ago. This is where you can go and find all the revitalization areas, and you can also find every Fannie Mae, Freddie Mac, and HUD on property throughout the country that's active on the market. And it'll really help you make some sales, especially when you're working with investors, because we all know investors like to purchase the worst house in the best neighborhood. So therefore, if you pull it up and it's a foreclosure on every house on the street, it's probably not going to be the neighborhood that they want to invest in. So it's a good tool. REO Locator.
Thank you.
You're welcome. Okay, yes,
But in order to find which homes HUD has designated fall into the Good Neighbor Next Door, do you have a separate area where those homes are listed?
Yes, ma'am. Well, what you do, first of all, under this program, they cannot bid. They submit over what's called an intent to purchase. So therefore, they have to submit over intent to purchase the home before it actually comes on the market for the general public. But when you're looking at the HUD Home Store website, it'll let you know who's eligible to purchase a property. So when it's under this program, if it says GNND, you know, police officers, firefighters, and the other two, then you know then they can purchase it at that particular time. But if it states like the general public, they can purchase it still, but they don't have first priority. Okay.
Just to explain one thing, you said before it comes on the market, an intent to purchase?
Before it comes on the market for the general public to be able to purchase, they submit over an intent to purchase. What I mean by that is that they cannot overbid or underbid. It's like a lottery. What has happened when you guys on their behalf submit over an intent to purchase, they're assigned a confirmation number, and that's just like a lottery draw. And if it's more than one people submits over a bid, whoever number comes up, and the other one will be a backup bidder.
Thank you.
You're welcome. Okay, also, they can purchase it at $100 down as well. So it's a good program. Not a lot of people know about it. A lot of people don't participate in it. The ones who do know about it, especially in the areas where the homes are selling, you know, a couple $100,000, these people in these professions, they love it. Majority of them, what they do, they'll purchase the home, and then when they 3 years is up, they go ahead and cash out, you know, go buy them a car or something, but that's their choice, you know, it's the lottery, you know. But also, a lot of people will ask, well, why these professions? Yes, sir.
Yeah, the police officer, the workplace of Detroit police officer wants to buy a home in Livonia, per se, or does it have to be local?
That's a good question. Police officers can purchase one of these homes anywhere. They do not have to live in a certain area. School teachers have to purchase within their school district to where they teach, okay? A lot of people ask, why these professions? Why not nurses or other professions? The federal government, their rule on this is that, they thought on this is that school teachers have to live in the area. If the children know that the school teachers in the area, most of the kids, they're gonna act better, they're gonna behave better. So the kids are our future. So if we keep the kids on track, it makes it better for everyone. The other professions, they keep us safe. That's why the other professions get these homes at such a discount. Yes, sir.
Firefighters.
Firefighters do not have to live in a certain area. They can't purchase these homes anywhere. REO sales to nonprofit government entities. This is the way this works. A nonprofit, first of all, it has to be a HUD approved nonprofit. It cannot be just any company with a 501c3. They have to go through the red tape to become a HUD approved. Okay, once they do that, they can purchase these homes at a 30% discount. They can purchase, if it's in a revitalization area, or they can purchase any HUD home at a 10% discount. They can get favorable financing from FHA by being HUD approved. And, you know, it's really good for the ones that want to be involved in it. What they cannot do, they cannot purchase these homes and then resell them and then use the proceeds of that sale to put it in another product of their organization. They got to keep it within their community development, because that's what the funds are there for, to help to revitalize and stabilize the communities. Our revitalization area, what constitutes a revitalization area? Well, first of all, it has to go with the household income, the people that's living in the neighborhood. And let me say this, guy, HUD homes it's not just like it used to be. I mean, it might seem like that in certain neighborhoods, but what I'm saying is that throughout the country right now, if you look, it's like $300,000 or $400,000 HUD homes coming available. And the reason being, on FHA, the maximum mortgage limit right now is in some high cost areas is $721,000. So therefore, you're gonna start to see more and more high priced HUD homes. Okay, so the household income is not the very poor. It's for the medium, middle class income family neighborhoods. Okay, the home ownership rate it cannot be just where one or two rental houses in the area. It's got to be a balance of the rental owners versus the homeowners in a particular neighborhood. And also, it's got to be some FHA foreclosure activities taking place within that neighborhood in order for it to be a revitalization area. If it's an area that what you starting to see a few HUD homes pop up and it's not a revitalization area, you feel like it should be, contact your local elected official, have them contact HUD in Washington to see about getting it approved. And it has to do with the census report. REO sales to nonprofits, like I said, I just mentioned they can get the discount. The dollar home sales. The dollar home sales is where a individual, where a nonprofit or local government can purchase a home for $1 if it's been on the market for 60 days. And now that's changed. It got to be priced below, I'm sorry, not 6 days, 6 months. But it's got to be priced below $25,000. In the asset control area, this program right here, it's been around a long time. This is where the grant money's been given out to try to keep some areas revitalized. And they can purchase these homes at a 50% discount, or some of them they can purchase for $100. And this is the last program I'm going to tell you about. This right here is the Section 8 home ownership program. A lot of people are very familiar with the Section 8 housing choice voucher, where the federal government will subsidize a family's rent. But a lot of people do not know they can also purchase a home under this program as well. But what they would have to do, this is administrated through the housing authority. You have to contact the housing authority to be able to, find out whether or not they are approved for this program, because not all housing authorities are. Okay, enough on the programs. Now let's talk about what it's going to take to be able to sell some of these homes. What you're going to have to do, this is an illustration of a football team right here. And what you're going to have to do to be able to sell these homes and sell more of them, if you might be already doing it, hopefully you are, but if not, you got to realize being in the foreclosure business, it's not a one-man show. You're going to have to create you a team. And you got to know the strengths and the weaknesses of your players on your team. For an example, loan officer, mortgage broker. They're both good, but one of them, the mortgage broker's strength is he can shop that loan out. Let me say this, the mortgage business is not like it used to be, by the way. It's not, it used to be the where everybody and their uncle was doing mortgages out of their house. It's highly regulated right now, okay? But they can shop that loan out, okay? There's weaknesses. It's gonna take them longer to foreclose on the loan most of the time. Loan officer, their advantage, their strength is they're going to be able to get that loan faster, but their weakness is they're going to be limited to the underwriters right there in their bank. So what you want to do, you want to know who you're working with, and what I would encourage you to do, if you're not already doing, pre-qualify these people yourself. It only takes about 5 minutes. And that way you'll need, not everybody of course, if somebody, they got a home they selling and then they got 800 credit score, there's no need to cry for these people. I'm talking about somebody that has went through a hardship, a first-time home buyer. That's what these programs are designed for. First-time home buyers are people that went through a hardship most of the time. And let me mention this, speaking of first-time home buyers, what you can do, you can right now contact the kids right out of college and right out of high school. They haven't had a chance to run their credit. And I'm serious, as well as their age is doing it. And you can sell them houses every day. Through FHA, they do not have to be, as long as they're working, they can be working for 30 days and they qualify for an FHA loan. And it used to be the way the credit card companies, that's what they done. But the federal government won't allow them to do that anymore. So, that's where you guys can step in and help them to become homeowners if they're ready, Okay. The realtor advertise, on the front line, but a lot of them don't realize they're the quarterback. What they doing, when the people come to them, they passing the ball off over to the loan officer and mortgage broker, and they standing in the background. But you got to call the shots. You got to call the plays, And once you do that and keep that control, you're going to be able to sell a lot more property. Because what lenders do, especially, borrowers, what they do, they follow the money. So if they come to you, they know you can sell them the home, you can ride them around, you can educate them. But if you tell them, go see John over at the credit union over there, guess what? They sticking with John. They following the money. So what you got to do, once you pre-qualify these people yourself, you let them know that, okay, you're not going to be the one to loan them the money, but you more valuable to them now because you assisting them in getting the funds, if you're not already doing so, and not just by steering them in one direction or another. Even, I don't know, I shouldn't use the word steering, by giving them a few companies to choose from. Okay. The next is a 203K consultant. The 203K consultant, this is an individual or a entity that has demonstrated that they have the construction expertise and also know the real estate market well enough to assist someone on a 203K loan without being, will help them without purchasing a home that's being underwater. And by the way, right now, it's almost, the last figure I heard is either 25 or 30% of the homeowners with mortgages in this country is underwater, meaning they owe more on their home than what's it's worth. So we don't need any more of that. That's what the 203K consultant does. Okay, know who they are in your area. The inspector. Let these people know that there's no such thing as a perfect house. But what you want to do, you want to let them know they might want to get an inspection done. It's going to be a case-by-case basis, of course, but and having that inspection, it really helps them out, letting them know there's no such thing as a perfect house, but that way they know exactly what they're buying. The last thing someone needs to do is to be able to purchase a home that barely could afford to get in the home, and then a few months later realize that they're going to need to have a roof or have a boiler or air conditioning unit. So that's where the inspector come in. And have some good inspectors that you can call on. Contractors. Most of these homes, they're going to need to have work on them. Not all of them, but most of them are going to need to have work on them. So you're going to have you at least 2 or 3 good contractors that's licensed, reputable, and bonded that you can call on, that these people can go and look at and be honest with the purchaser and to help them to be able to purchase these homes. Okay, even though that you know the houses yourself, you know what it takes. You know how to look at a house. You don't want to be the one to be out there pointing out all the things. You can let the contractor do that. Okay, you concentrate on assisting them as far as getting the sale done. And then of course the next is going to be the housing consultant, the housing counselor. That's a company that has been given money by HUD to assist people to be able to stay in their home and also to become homeowners. Know who they are in your area. I'm going to talk a little bit about FHA. And I realize this market is different. It's going to be kind of difficult on some of these homes would have been priced so low in order to be able to get an FHA loan. But keep this in mind. Without FHA, there will not be a HUD home. And then also keep this in mind, FHA is not just for HUD homes, it's for any home that you can sell. The FHA loan is the best thing going. And the reason it is because there's no prepayment penalty. For an example, if someone gets a HUD home and then, if someone gets an FHA loan and they want to pay that loan off, they can do so at any time without paying a penalty. FHA loans are fully assumable. These loans can be assumable. As long as someone can qualify for the mortgage, it's fully assumable. So that's a big deal right now with the interest rates as being as low as they are. Say 10 years from now, interest rates back up over 10%, they can assume these low interest rate loans. There's no credit qualifying FA to FHA refinances. So if somebody got an FHA loan and they want to refinance, they do not have to qualify credit-wise. They do have to qualify as far as job stability and income, but for as credit-wise, they don't have to qualify because they already got an FHA loan. Upfront mortgage insurance premium, okay? A lot of people will say, well, I really don't like all these programs because all it's doing is taking our tax dollars, having people maybe that don't even really want to work no way. But the good thing about these programs is they are self-sufficient. Our tax dollars is not going to provide for these programs. When someone makes the payment into that mortgage insurance premium, that's what's keeping the HUD FHA programs going. Okay, but our tax dollars have to be in place as a reserve in case it is needed. And as far as the mortgage insurance premium, if someone had a FHA loan for 5 years and they paid down to where it's 78% loan to value, they don't have to pay into that anymore. They have to speak with their lender, get a new appraisal, and they don't have to pay that mortgage insurance premium anymore. If someone gets a 15-year mortgage and if they put down at least 10%, they don't have to pay into the mortgage insurance premium. Down payment, of course, we know is only 3.5%. Yes, ma'am.
Does FHA notify the lessee?
No, ma'am. They would have to be the one to know that exactly. So that's where you guys can come in at to help them. Yeah, because a lot of them they're not going to know it. Yeah. Right now, what FHA says that you can get an FHA loan with a 580 credit score. But what happens is the government sets the standard, but the lender can raise the bar. So the lenders right now, if they have too many foreclosures on their book, they can lose their approval status of being able to loan money through FHA. So right now what the industry is saying is that now that 580 economy is too bad for that. A 620, most of the time you're okay. So if you decide to pre-qualify somebody, like I said, it's only going to take about 5 minutes to do so, pull their credit report from an agency that will allow you to be able to pull from all three: Equifax, TRW, and TransUnion. What you want to do, you want to look for the mid score, the one that's in the middle. If it's at least a 620, they're going to be okay. Okay. The only other thing that you need to look at then is their income to debt ratio. The top ratio has been 31%. That means that their total overall mortgage payment could not go over 31% of their gross payment. Okay. And if they got some items on their credit report that they're making payments on, they will be paid out within 10 months making their regular payment. They don't have to count that. But at 31%, that's the amount that they can qualify for. Okay, 43% would be their proposed house payment along with every other monthly recurring charge that they have or show up on their credit report. That's the 43%. It's just that simple. So if they meet those ratios, they got the 620 credit score, only one other thing you need to look for: make sure they've been on their job for at least 2 years. If they've been on their job for 2 years, or if they just graduated college or either high school, not necessarily have graduated, just got a transcript showing they were in school, then they're going to be okay. Okay? Yes, sir.
If they change jobs and it's in the same field.
If it's a change job, if it's in the same field, they're still going to be okay. Yeah. Yeah. As long as they can't be jumping around different occupations. It's in the same field, they're going to be fine. Okay. Now, what I'm suggesting that you do on some of your clients is to pre-qualify them. But what's going to happen once you pre-qualify them and you look at it, and then what you're going to do then, you're going to pass them over to your loan officer, your mortgage broker that you're working with, and let them do it automatic underwriting. That's where the individual is not going to have to make the decision. The computer is going to make the decision for them. All they're going to do is put the numbers in. It's going to come back approved, denied, or conditionally approved. And that's the total scorecard. In order to get an FHA loan, there's no credit history required. You don't even have to have credit. You have to have, well, I should say you don't have to have traditional credit. You can use utility bills, insurance. That's credit when it comes to HUD. Okay. Collection accounts do not even have to be paid off. Okay. If it's a judgment's going to have to be satisfied. But if it's a collection account, small collection account don't have to be paid off. What FHA looks at is that what has took place in someone's financing within the past 2 years. If 2 years have went by and they've been successful in making their payments, they don't have any outstanding judgments on there, and their credit score is 620, they're going to be okay. As far as bankruptcies are concerned, if someone could have had a Chapter 7 bankruptcy to where they didn't have to pay any of their money back, and 24 months that went by, they qualify for an FHA loan. Or they went through foreclosure. If they went through foreclosure and 3 years has went by, they qualify for an FHA loan. Or they had a Chapter 13 debtors court to where they make payments on a bankruptcy, and in 1 year had went by, and the court will allow them to enter into a new debt, they're going to be okay. And what determines whether or not the court going to allow them or not is that whether or not they've been making their payments on time. And if they working, what's going to happen is it's just coming directly out of their paycheck. So it will be to where it's going to be on time, as long as they're working. No reserves are required on an FHA loan. Yes, ma'am.
I have a client that I was getting pre-approved for FHA loan through a bank here, and the banker explained, saying that the person was be pre-approved as FHA, but once everything went through, it would change over to conventional. heard.
No, I hadn't either, unless he was saying, okay, he's gonna refinance it after a certain period of time.
No, he was telling me that that is a process of the bank itself.
But it seemed like to me it would have to be the way that they refinancing.
No, not refinancing.
What did he
They
say it
would-
was?
He was saying that they would get approved as FHA.
Okay,
But once the initial loan, once everything went through and everything was approved, it would then turn into conventional.
oh, okay, so in other words, before they actually close on the loan.
Right.
Okay, yeah, they can do that,
They
yeah.
do.
I don't understand why they would want to, but
I don't
they
understand.
can.
More money on an FHA loan.
I'm sorry.
The bank makes more money on an FHA loan.
Sure. Plus it's insurance. I don't know why they want to do it, but you know,
Makes sense.
yeah. But anyway, like I said, no reserves required. You know, most banks, they're gonna want you to have some money in reserves, at least, 3 or 4 months of payments in reserve. FHA, you do not have to have that. You can have a co-borrower that don't live in the home under FHA financing. Down payment assistance is available. There's people that's purchasing homes that's walking away from the closing table with money in their pocket because they know when the down payment assistance is there and they're getting these funds and they don't have to take all of the funds to be able to purchase the home. Okay. Of course, the seller can pay up to 6%, and the reason it is up to 6%, it used to be 6% across the board, but now that has changed. It has to do with where they live at, because what the government found out was when they were saying 6% across the board, there were a lot of lenders adding on just junk fees just to add up to be that 6%. So now in some areas it's only 3%. Okay. Repair escrow financing is available. Let me explain to you what repair escrow is when it comes to HUD if you don't know that. What repair escrow is to where someone purchases a home, they can borrow additional funds to be able to have repairs done, and those funds are put in an escrow account. When they close on the loan, the money is sent to the contractor who does the work. So the money never touches the purchaser's hand. It could be done in up to 3 draws. It can take up to 6 months in some cases before they even have to start making payments on it, depending on the extension of the work that needs to be done. Okay, but it's good to know about. Also, when you see a HUD property and you see a repair escrow amount, that amount is not etched in stone. In other words, that's not a permanent amount. That's an estimate. So after your purchaser and their lender, their contractor, inspector get together and they find out, well, we want to borrow more than that. As long as it don't go over $5,000, you can still get that 203B loan. If it's, or either they might have somebody in the business that's going to do them a favor. It might not cost that much. So we don't need to borrow that much. We're going to lower that escrow amount. You can do that. In order to get an FHA loan, you do not have to be a citizen of this great country of ours, but you do have to be eligible to be able to work. You got to have a Social Security number. Another good thing about the FHA financing is that if it's a presidentially declared disaster that comes through, a tornado, hurricane, thunderstorm, okay, a 203H loan is available. A 203H loan, a person do not have to put down any funds at all to be able to purchase the home, and they can do not have to buy where their home is located. They can relocate to anywhere in the country and still get a home under the 203H at no money down. There's when it comes to purchasing a home, there's really only 3 different mortgages when it comes to FHA. You got the 203B, that's the standard one. Most of the time when you hear someone talking about an FHA loan, they're talking about the 203B. You know, a lot of times I see people advertising, they say, well, this home is not eligible for FHA. Every home is eligible for FHA. It just depends on what kind of FHA loan you're trying to get. But what they mean is it's not eligible for the standard 203B loan. Okay. Then you got your 203K limited repair loan.
Jason,
Yes.
could you back up one slide?
Sure.
I just want to ask you a question about the repair escrow. Well, I just had one the other day, and they had repair escrow on the contracts. And my buyer literally asked me, well, do I have to pay that repair escrow, or is HUD paying that repair escrow? And I wasn't sure how to answer that.
Yeah, well, the way it works is the purchaser is paying it, but they're not paying it up front. It just becomes a part of their loan amount.
Okay.
part of that loan.
Well, it was a cash deal, so that's why we were wondering.
Yeah, now if it's a cash deal, it would not apply.
Okay.
That's only for FHA loan.
Okay. Well, it was a furnace that HUD replaced, so it showed up on the contract, but then we switched it to cash, so that's why I was asking.
Right.
All right.
On this limited repair, the way it works is up to $35,000 before its repairs can be done on. Okay, there is no minimum when it comes to the streamline loan. And a lot of people will ask, well, can I do the work myself? If you can demonstrate you got the credentials to do so, you can do the work yourself on a FHA loan. The other one will be the 203K rehab loan. The 203K rehab loan is a loan to where major work needs to be done to the home. It's structural involved. And if, for example, if somebody want to take a 4-unit dwelling, turn it back into a 1, relocate a load-bearing wall, anything structural involved, that's the 203K rehab loan. That's one you might want to know about because a lot of people cannot see the after picture. They can only see before. But some people can. You run across some of these people that they love a historical house, they love an old house, but they really don't have the funds to repair it and to rehab it. Let them know about this program. And this is the bottom line of the FHA loan. I'm not going to talk anymore about the FHA loans because I realize I'm in Detroit and you got your funds in place most of the time. But I do want you all to know about the FHA because, like I said, that's what keeps the whole program going. Okay, but the bottom line is that the income used has got to be verifiable. Okay, it cannot be a stated type of income. It's got to be incomes to where it's taxable. Cannot be non-taxable type of income. That's the bottom line when it comes to FHA. This is the REO located that I was mentioning about earlier. Okay, there's some numbers you might want to jot down. If you got any questions at all when it comes to HUD or FHA, this is a toll-free number that you can call, 1-800-CALL-FHA, and this number, you will get a live individual during normal business hours, be able to answer any question that you might have. Or you can go to this website, www.hud.gov/answers, and you can pull up about 1,300 questions and answers that you can search them by keywords or by category. And also, if you wanted to, you can email answers@hud.gov, and we'll be able to get all of your questions answered that way as well. Let me share a few little statistics with you. Some of you might know, you might not know. Right now, there's 15.7 million homeowners underwater. Okay, I already mentioned that. Okay, the number of short sales. Let me say this right here. For you guys that's in the REO business, you want to learn everything you can about short sales. Okay, as we all know, there's nothing short about them, but that's getting ready to change because what Fannie Mae has mandated, they're trying to mandate it to where their lenders going to, if it's a short sale, they got to have something in writing within 30 days. So, and last year there were more short sales than there were foreclosure properties. All of the lenders right now in the government-sponsored enterprise is trying to find a way to get more and more properties in the short sales because they realize short sales is not a drain on the community as much as a foreclosure is. And they also realize that they can make more money by selling these homes on a foreclosure, on a short sale than they would a foreclosure because the home is not going to be sit vacant, so therefore it's less chance of the house being vandalized. Okay, GSA, government-sponsored enterprise. Let me say this right here about Fannie Mae, Freddie Mac, and even with the banks. Myself personally, I think HUD is the best way to be able to purchase a foreclosure property. One of the reasons being, you know what's going on throughout the whole process. There's nothing happening behind the scene that you don't know about. You'll be able to tell your purchaser, hey, on this day, we're going to know who's going to have the winning bid on this property. We're going to know who won it and what the bid amount was. the government sponsored enterprise in most banks, you know nothing. You submit your bid over, then you just wait. And then maybe a week or two later, sometimes you get an email saying, okay, I'm ready for your highest and best.
Yeah.
You submit over your highest and best, you still don't know anything. You just wait. And then, unfortunately, not saying, if there's some Fannie Mae brokers that are in here, I'm not saying all of you guys do this, but unfortunately, like I mentioned earlier, some unscrupulous people in some business, what they'll do, okay, you submit your bid for $30,000. I got my favorite investor buddy over here. His bid was $30,000. You want to go 31 on it? Okay, I'll go 31. You never know what's going on. On HUD, you don't have to worry about that because the listing brokers for HUD have nothing to do with the bid process. It's all done computerized. Okay, even us as the asset managers, we have an agreement with HUD that we know what's going to be accepted, but we don't even vary. So if you submit over a bid on a HUD property, whatever you submit the bid for, you're not hurting anyone's feeling because it's all computerized. You might be wasting your time though, but now even with HUD, you know whether or not you're wasting your time or not. If you submit a bid over, if you don't get a counter offer, then you're not even in the ballpark. So therefore, HUD is the best way to go. Okay.
Ballpark, they will send you a.
You will get a counter offer if you're in the ballpark. If you're not in the ballpark, you're not in the ballpark. You're not even gonna get a counter offer. Okay. And now let me say this though. Now the counter offer is not like your traditional counter offer to where you get a counter offer, so you're the exclusive person on this counter saying a certain amount of time you get your bid submitted over, you'll be able to get this. Where this counter offer works is you will submit it over. Whomever that submitted a bid over during that simultaneous period will get that same counter offer stating that this net amount what it would take to be able to purchase her property. Okay, and then it might be somebody that didn't even submit a bid that day, submit one over higher than yours, they can still get it, but at least you know you're not wasting your time. Yes, ma'am.
I was saying the ballpark because it was a house for $40,000. My customer wanted to bid 16, but they got a counter offer for $30,000. So I'm like, okay, how's that? I'm in the ballpark.
It depends on where you're playing ball at. You got little league fields and you got major league fields. Yes, H.H.N.
I just like to ask a simple question to you. Occasionally, we still get those agents that think that we're still looking at the old system where we can see all the bids.
Right.
Okay.
Do we just give them the 800 numbers and tell them, you didn't get your bid, you can ask the 800 number, or how would you recommend it?
Okay, I'm sorry. Now, what was your question? If somebody asked, what's the question?
You get an agent that is religiously calls you every day. What's my status? What's my status? What's my status? If you didn't get the email, that's your status.
Right. Okay, so if they submitted a bid over, and then they did not get any response, well, all they got to do is look at the bid results and they'll let them know that somebody else got it.
I tell them that, but they don't listen.
I mean, just have them call our office.
Okay. That's what I've been telling them. I said, you can voice your opinion at the 800 number because they think I'm the one rejecting the offer.
Yeah.
Is it a way that
It's all your fault. It's all your fault, Chad.
I just had a home that was only listed for $16,000. My guy bid $26,000.
Okay.
So I know he had to be up there with the highest people.
Okay.
And I never got something to say, hey, this guy wanted to go as high as $35,000. And I just didn't get it.
No, because someone else bid it higher. You're not going to get a counter offer if somebody else bid it higher. Yeah, that would be like an auction, Once the amount is met, the highest net to HUD was looked at.
Right.
That's it.
Way higher than my percentage.
Yeah. Sometimes it did. Sometimes it did that way.
Could have been $1 more.
Yeah, exactly.
No.
The counter would be only if nothing was accepted.
There's no other bid.
Right.
Yeah, there's no other bid.
Okay. All right. Let's see. Okay, this is a statistic right here. The REO prices is increasing, guys, to where the prices of the non-REO properties it varies throughout the country. They're either staying the same. Most economists think we're pretty much at the bottom here. Most of them are not going any lower, but they're pretty stable. but they're not increasing. The foreclosure properties are increasing because the demand has gotten a lot greater, because a lot of people are realizing the stock market is so risky, so it's more and more investors want to invest in single-family dwellings. With this being known, the government-sponsored enterprise has come out with a REO to rental program. This is to where individuals or entities can purchase foreclosure properties in bulk. But I'm not speaking of, 4 or 5 homes. I'm speaking of they want to purchase, 500, 200 properties. They can do so under this program. It's a pilot program we just implemented a few months ago. Right now it's only in a few markets. Michigan is not one of them, but Michigan is being looked at. Right now it's Atlanta, Chicago, Arizona, and a couple more states. So that's something you might want to keep in mind. If you're working with some investors, they got really deep pockets, let them know it's a program available where they're going to be able to purchase some of these homes in a large bulk volume. They have to be pre-approved to be able to place bids on these properties. The HUD's overall budget right now is $44.8 billion. And this is, for the housing program of it has increased 3.2 billion, up to, 3.2%, up to 1.4 billion, okay? The FHA market right now is starting to shrink. FHA was designed for, like I say, the first-time home buyer or someone that has went through a hardship that needed the government assistance. It wasn't designed for just everybody to be able to get a loan. That's where it was designed. So we're starting to shrink now. That means the economy's starting to get better. Yes, sir.
How much of that is of that shrinking market is now coming back to FHA as far as a foreclosure?
Well, when I was talking about shrinking, I'm speaking of the overall market, not the foreclosure market. But to answer your question, though, right now with the shadow inventory being where it is, we really hadn't seen a decrease. We're starting. It's really an increase. Right now, the last figures I looked at, it was about throughout the country. It was almost 80,000 foreclosure HUD properties, and that's almost double to what it would normally have been before this recession. It generally would average somewhere around 44,000 properties. And with Fannie Mae and Freddie Mac, the total is about 215. Fannie Mae got more than any entity. Fannie Mae got almost 80,000 properties. So it's a little bit more than what the HUD has. FHA insurability codes. Every HUD home will be identified by an insurability code. These codes will either be IN, IE, or UI. The first thing I would do if someone asks you about a HUD property is to look at this code. What this code is going to do is going to identify the condition of this property. Okay, with it being an IN, this property should, the reason I'm saying should, we know the condition of the properties can change on an hourly basis, but it should meet minimum property conditions in its present condition. Okay, doesn't mean that the property don't need any work at all, but it means that the electrical, the plumbing, the heating, cooling system, the roof, and the structural should be in good condition. Okay, so those are the ones you're going to look for. That, like I said, it should be pretty much good to go for an FHA loan. Okay, the next is going to be an IE. The IE, that's insured with an escrow. This property right here should need work, but not to exceed $5,000. Anything over $5,000, well, $5,500, because there's a 10% contingency. Okay, that means that a person can purchase one of these properties, get up to $5,500 worth of repairs done, and still be able to get the 203B loan. They do not. Another appraisal is not required. The lender automatically can raise the loan amount up to $5,500 for the repair escrow and the 203B repair escrow. The other one is going to be your UI. Your UI, that's your uninsured property. That's the one that's going to need the most work. This property here is going to be sold a cash sale, or it will be sold to on a 203K loan. These are the ones most of the time your investors are going to buy. They're going to be in the worst condition, but they're going to be priced accordingly. These are going to be the ones with priced favorably. All HUD homes, by the way, going to be priced at a good price because the appraisals are instructed to use other foreclosure properties as comparables. So therefore, they're going to be priced, you know, to sale. This is a chart here showing you what's going on behind the scenes as we bring these properties to the market. If it's on a lottery period, there's a 7-day window of opportunity what the GNND participants have to be able to submit over their intent to purchase. And if you notice, it's the 7th-day period, and then after that 7-day period, on that 8th day, that's when the bids are looked at. If there's no acceptable bids coming in on that property, well, I'm saying there's no bids coming in because there's going to have to be acceptable if they submit one over because they cannot underbid nor overbid. If there's no bids going in on it, then we would move on to market the property. If there were bids that came in on it that looked good, first thing that's happened is under this program, it will be checked to see whether or not they own any residential dwelling. If they do not, they'd have an opportunity to purchase the property. The next period would be the uninsured properties. If an uninsured property comes to the market, it will be a 5-day period to where only owner occupancy purchasers can purchase these homes. After the 5-day period, on the 6th day is when your investors can start purchasing. Okay, so if it's uninsured, they only have to wait 5 days, the investors do, before they can start placing their bid. After that, it goes on a daily bid opening. What I mean by daily bid opening, that's 11:59 p.m. to 12 p.m. the next night. So it doesn't make any difference at what time of the day someone submits an offer over. It all has to do with the net to HUD. There is no buy now button. This is not eBay. All they can do is just submit their bid and wait to see who have the winning bid at the end of the time period. Okay. The next would be an insured property. If this property is insured, which means insured with repair escrow or just insured, then they can submit their bid over within that 10-day period. If they're owner occupancy, all their bids will be held, and it will be open at the end of that 10-day period. Yes, ma'am.
I feel like the prices, this is what I heard, that the prices that they put the houses out there for is what they, I guess they appraised them at, or this is what they should be going for. So if you make, I've had several bid way over. So if they have already, this is what the property should, and then they're accepting offers way over, are they making people sign if they pay the difference if they can't get the mortgage? How is that working?
Well, if it's an FHA loan, and if HUD is not going to allow that, not going to insure more than what the appraised value is of that property. So if it's an FHA loan, if somebody bids over higher than the appraised value, not the list price, by the way, but the appraised value, then they would have to pay the difference out of their pocket themselves.
So their appraised value and the list price is totally different.
That is correct. The appraised price and the list price is going to be different. That's correct. Okay, but as you notice though, after this 10-day period is up, it'll go on a daily bid opening, but it's still for owner occupancy purchases though if it's an insured property. And it will be that way for 30 days. And then on the 31st day, if there's no acceptable bids coming in on it, that's when investors can start placing bids. The other would be an extended period. That means that where it has went through the 5 day if it's uninsured, or either the 30-day if it's insured, and now it's just on a daily bid opening. It's called an extended period, and it will remain on the extended period for 180 days. It's not going to stay at the same price. We're going to be doing everything we can to aggressively sell the property, but it will be there for 180 days, and then after that 180-day period is up, if it do not sell, then it will go over to the dollar bid period. Very few properties will make it to this point. If it makes it to this point, this property's got to be stigmatized in some sort of a way, or some sort of functional obsolescence going on with it. But it's a make it here. It will stay here for 10 days, and then If no government agencies or nonprofit submits over, well, no, nonprofit can't submit a bid on a dollar home, just the government agency. If no government agency submits a bid over, then at that point, it will go back to the general public on the extended period. And that's how we bring these properties to the market. Okay, right here is the registration link. Everyone here that is a broker has to re-register each year, and by doing so, you would go here and submit over what's called your SAM. SAM is an acronym for Single Asset Management System. You would go here, submit over your SAM's 1111 form, your 1111A, a letter from the IRS. This states your letter 147C. Do not necessarily have to be this letter, but it's got to be an official document from the IRS showing your company name, your EIN number, and your physical address. And then, in addition to that, you need to have a copy of your broker's license, your driver's license, and a utility bill or a bank statement or a phone bill, something showing your physical office address. That's what you'll need to be able to submit your SAMs to get your NAIC number, and you need to do this annually. The registration process, like I mentioned earlier, just a one-time thing. You're just registering on the website. This is a frequent questions and answers. If you haven't sold a HUD home before, or if you it's been a while since you sold one, you got someone coming to your office, or you finna meet someone, what I would do, I would go here, familiarize yourself with these questions and answers, and in that way, when someone's sitting in front of you, you already know the answers that be, they'll be fresh to you, and you appear to be the professionals in which you are. Okay, to register, to be able to place a bid for someone, you go here, put your, create your username and password, put in your security questions and your contact information. HUD Home Store, this is the official website right here. This site is very simple, very user-friendly. Basically, it's just designed, you go there, find the property, place your bid, go back to look to see whether or not your bid was accepted. That's all you do off this website. But this site also links you over to HUD's official website, HUD.gov, which is a wealth of information that you can find. But this is a simple, straightforward website. And you can find the property by going here and to log in, put your username, password in. You can search these properties by clicking on the state where you're located. And once you click on the state to find the properties, you can click on the county, city, zip code, or you can go directly by the case number or the price range. From there, you're going to see a property detail page. On this property detail page, yes, ma'am.
Can a non-realtor get on there?
No, ma'am. Well, yes, ma'am. A non-realtor can go and look and see what's available, but they cannot place a bid. They can't register and place a bid. Okay, but you go here and look, you look at your property detail page. On the property detail page, it will have here the list date of the property. It'll have here the listing period. This one here states lottery, so that means that only the GN&D participants can purchase. If it's stated government or it'll let you know whoever can purchase the property here. Okay, it'll have a bid deadline. It'll have here the list price versus the as-is value. The list price, that's the price that the property is listed for at this particular time. The as-is value is the last appraised price of the property. So that lets you know whether or not if someone wants to overbid, if they go higher than that as-is value, if they get an FHA loan, they're going to have to pay the difference themselves out of pocket. It also states what type of financing can be used on this one. This one is an uninsured property. And it'll also have all your other, your basic information, bedroom, square footage, your bill, things of that nature. But okay, you go here, you want to place a bid for somebody, just click on HUD Registered Bidder. And what you want to do, you want to first of all click on your name type, and you would be broker. You would have to have your broker's EIN number. It's two things you're going to have from your broker in order to place a bid. You got to have your broker's EIN number, and then you got to have your broker's tax ID number. Okay, that's two things you got to have. Make sure you got that when you sit down with somebody to fill out one of these contracts. Okay, put in the EIN number, and then put in your characteristic code. Okay, now you're submitting a bid. What you want to do, go ahead, line number 1, put in the amount that your purchaser is bidding. This is the bid amount here, okay? Line number 2, number 4 right here, what you want to do, you want to put what type of financing is being used. Whether or not they say 203B or 203K or cash. Anything other than FHA loans are considered cash or conventional when it comes to HUD. Even if they're going through another government program such as VA or USDA, it would still be considered conventional or cash if they're not using the FHA loan. If someone tells you that they want to use their VA eligibility to get a VA loan to purchase a property, you can inform them that it's going to be very difficult for it to work. It's a catch-22. HUD states you cannot do any work on this home till it's yours. Okay. VA states that you cannot move in the home until it's ready to be moved in for no repairs needed. I mean, not even a missing doorknob, a shower head. It's got to be, ready to go. So therefore, it's not going to work. I've seen it happen a few times, like if a builder will build a home and someone, unfortunately this happens, someone will stand there for only a few months and then they leave and becomes a HUD property, then sometimes the VA home will work, but not often. Okay. The next would be, number 5, HUD will pay a reasonable and customary amount of closing costs. Here, HUD will pay up to 3%. So you want to put that in on a dollar amount, okay? If you're working with someone, I mean, it's a hot property and you think it's going to be other bids going in, and if you know they got the funds to pay their own closing costs for them, you want to encourage them, hey, you might want to pay your own closing costs, because if you ask HUD to pay it, HUD will pay up at 3%, but this is going to decrease your bid amount because it always has to go with the net to HUD. And the only other variable in that equation is that your commission. So sometimes people will lower their commission a couple dollars just to be able to have a winning bid. Okay. Next, you want to put put your commission. HUD will pay you up to 3% as a selling broker. You put that in there. 6B is going to auto-populate. That's the listing broker's commission. Okay, line number 7. That's the most important one of all right there. The net to HUD. That's going to determine who's going to be able to purchase this property. Okay. Number 8, owner occupancy or investor. Hear me on this. If you don't get anything else out of this, please do not let any investors get you in trouble. What I mean by get you in trouble, have you wearing black and white and orange jumpsuits. What the federal government is starting to do now, through the Inspector General, if you submit over a bid for someone and they state they're going to live in the home, okay, as an owner occupancy purchaser, you have to live there for at least 12 months, and you could have not purchased another HUD home within 24 months. So if someone come to you and say they want to place a bid, and they, as an owner occupancy, and let me say this, investors can buy these homes every day, all day, sell them the same day if they like. But as an owner occupancy, they place their bid through you one time, and then they come back within a 12-month period and place a bid with you again, then you're going to be in trouble along with them, because you should have known that they wasn't going to live in the home because they just purchased one from you before. Okay, but if they do it, they can get away with it one time. But if they do it again, they're going to be caught. And it used to be to where it had to be an audit had to take place to be able to catch someone. But now, thanks to technology, the EIN number, their Social Security number, is going to follow them. So if they try it, a red flag is going to pop up. Okay. Next, on line number 11, primary purchaser, secondary purchaser. This is going to be important. This is where you need to know what's going on with people's financing, when they come to purchase these homes. Don't just rely on the lender, because these homes are not, these contracts are not assignable, which means someone cannot win a bid and then say, well, I don't think I'm going to buy, but I'm going to assign it over to someone else and let them buy it. You can't do that. But what you can do, the primary purchaser has to stay there. So, but if you know which out of a couple, for an example, the couple, look at the one that's got the best credit. That's going to be your primary purchaser right there. Okay, and the one that's got the quickest credit will be the secondary purchaser because the primary has to stay there. But just say for an example, if you pre-qualify somebody, they send them to the lender say it looks good to me, and they start to process the loan, and then when they look a little bit further, they find some derogatory coming up on one of them, so therefore they're not eligible for the loan. They can be removed if they are the secondary purchaser, okay? And the primary purchaser's income to debt ratio will not allow them to be able to purchase on their own, so you need to bring in a parent, for an example. Then you can do so. Yes, sir?
What if the person that bought a house with another agent and then come to you?
You still think about that? Yeah. Now, if that happens, then you're really in the clear because you didn't really have any way of knowing, you know. But like I say, they will be caught because because of that number was attractive. But yeah, but you know, you didn't have any way of knowing that. Yeah. Yes, ma'am.
One quick question. I have parents that want to buy a home for a child. Parents have a property already. So parents can write a gift letter.
That's correct.
Child can be buyer number one, but the parents want to be on the deed.
Okay. If they get a loan or paying cash or what?
They are going to give him a gift.
I know some for their finance because
They're buying it cash.
okay, if they give a gift letter, that would only be for if financing is being involved.
Right.
You know,
So they have a gift letter, but I guess what I'm concerned about is the child is going to be the owner occupant, but the parent wants to be on the deed.
If the parent's on the deed and there's no loan, in other words, when you give a gift letter, that's basically like with funds to help them to acquire a loan.
Okay.
So therefore, they will be considered an investor. But if they're getting a loan and they give a gift letter, they will be okay.
I guess my question is not from the financing perspective. My question is the owner occupant designation.
Right.
So can we have the parent on the deed with the child as the owner occupant?
If it's a loan involved, you can. If it's not a loan involved, they will be considered an investor and they cannot. I mean, once they, like he just mentioned, quick claim deed. Once they own the property, they can do whatever they want to do with it.
Okay.
Yes, ma'am.
So you're saying two people can't be on the deed?
No, ma'am. I'm not saying two people can be on the deed, but what I'm saying is that in her scenario was one of them is not going to live there and the other is going to live there because that would be opening up for an example. If you could do that, an investor would go out and find people. Guess what? I'm gonna buy this house. I'm going to be on deed. You're going to be on deed. You're going to live there, and then therefore it will be an investor, so they would be against the rule. Yes.
Another thing I've seen done is they can go afterwards and write a private warranty against that property and record it.
Yeah, sure. You. I mean, these are.
They would have to win a foreclosure or divorce or something.
Sure. Yeah, that's a good idea. Once you close on the property, you can do whatever you want to do with it. It's your property.
So you stay in it, right?
I'm sorry.
You're an owner. You bought it as an owner occupant.
As long as you live there for 12 months, that is correct. Mm-hmm. Yes, sir.
I hope this is maybe part of what she's trying to ask here. This is what I want to ask.
Okay.
Going back to her example, mom and dad got cash. And quite often, mom and dad come in, sit down, they want to be a party to the contract. And the question I feel that she's trying to ask, at least I'm going to try to ask, is the junior child is going to be owner occupant. And what I do is I put junior on as purchaser number 1 and mom over on purchaser number 2. And that way they're both on the deed. And I look at that as an owner occupant because mom is the bank for the child. Is that not the right way to do that?
But you know what? That's kind of been tossed around a couple different ways. But you know, like I said, I've been doing this a long time, and I've seen it tossed around both ways. But what I'm going to do before we leave here, I'm going to have a definite answer to that because I don't want to misguide you guys in any way. But I do know if it will work if it's a loan involved. But if it's not a loan involved, I'm still thinking that even though it is a family member, it's not going to work because it would be, like I said, investors can do the same thing. In other words, there's no documentation there. But once they purchase the property, you know, it's theirs. Or either what the parent could do, they could, if they really didn't trust the child, what they could do, they could create a mortgage on it, and then the mortgage is there. So therefore, whether they own that deed or not, they still encumbering the property.
Or they can just give the money to the child, and the child can just put it in their name and not have to worry about it.
Sure.
Just quit claim them on
After closing. Exactly.
You know, close
Exactly.
HUD
Yes,
and
ma'am.
then quickly.
Why is it different if there's a loan involved?
Well, if there's a FHA loan involved, okay, because the way it's designed is to be able to help someone that needs help. If the parents got the money to pay them, they don't really need the help.
A co-signer and an FHA?
Yes, ma'am. Yes, ma'am. If the parents going to loan them the money, they don't really need the help. I mean, they got the fund. You know, so yeah. Okay, but I will check on that though. I'm 99% sure I'm right, but I'll check on that. Okay. Bid summary. If you submitted over a bid and you attempt to submit one over, you get to this point here, if it just says bid summary, your bid has not been submitted yet. There's some people will get to this point, think they submitted a bid. You got to make sure you get that confirmation number to know your bid has been submitted. But what you can do here, you can look over the information that you submitted in, make sure you enter it exactly where you want it to. Read over your certification, acceptance, terms and conditions, and confirm it. Then you get a confirmation number. Then you know your bid has been submitted over at that point. Okay. Make sure you hold on to that. After that, yes,
What happens between the time you submit it and let's say you win the bid, you're fired, and they decide to walk? Can they do that? You just go online and...
Sure. Okay, what'll happen is, well, first of all, when you submit over a bid, basically that's what you're doing. You don't have a binding agreement at this point. You submit it over a bid. Okay. So if your purchaser wants to raise their bid, they can do so. It's automatically going to cancel the lower bid out. But if they wanted to cancel their bid, you can do so. What they have to do, have to send over a cancellation notice.
What happens if they win the bid, then decide they want to cancel before they send in that?
You mean if it's done before they send the paperwork over, it's nothing going to happen. We're going to bring it back to the market. But after they submit the paperwork over with the earnest money, then that's a different story. Okay, once someone to go to review their bids, it's going to be in one of these 5 categories. It'll either be open, which means that it has not been reviewed yet, it's still open, or it'll say accepted. That's what you want to see. That means your bid has been accepted. You got 48 hours to get your hard copy of the contract and the addendums over. Next, it would say withdrawn. That means that you, on your personal behalf, have withdrawn that bid out. Or it'll say cancel. Cancel meaning that you have no opportunity to be able to get this property at this point. It's been canceled out due to the fact that someone else submitted over a high bid, or the property's been withdrawn from the market, or whatever, but it's canceled. Okay. The next, it'll say under review. Under review meaning that the bid has been awarded to somebody, but it's under review. You still have a chance to be able to win the bid on this property. For example, if you stated that you wanted to be a backup, it could stay under review until that property actually closes. Yes, sir.
I think it says OBS now, other bid selected.
Other bid selected?
Yes.
Okay, okay. So instead of under review?
That's correct.
Okay,
Yeah.
Thanks, Mark.
I think that's only, like you said, only when you selected yours as a backup.
Right, okay, okay. Yes, ma'am.
Did they change the rules on backup? Because I thought you were backup only for 2 weeks.
Well, technically, we can go as a backup until that property actually closes. Okay.
Do they though?
Well, it's a case by case basis, but most of the time, you know, if it don't sell, we try to go ahead. Yes, ma'am.
Is this normal? I had a client bid on a house, did it 3 times. Each of them were canceled.
Okay.
After the 3rd cancellation, a week later, I got an email saying congratulations.
Right. Well, see, that was one of them situations where it was a backup. That's what that was. What she just said is they submitted over bid, they got a cancellation, but a week later they got a congratulations, you got the bid. That one came as a backup. So that's when I would always pretty much check that you want to be a backup bidder, because you have the opportunity to say, yes, I want it, or either no thanks, we've already found something else. Okay, technical support. When it comes to HUD Home Store, this is a number that you can call. You would get a technical support rep that will be able to answer any questions that you might have concerning the website. Okay, these are the addendums that which you would need to be able to submit over when you submit your contract over. And these addendums are property specific, so you don't necessarily have to submit every addendum with every property. For example, if it's a 203K loan, submit your 203K documents. If it's not, please don't send it. And it works that way for every addendum that which is in there. There's certain addendum that you will send over every time though. But as you sell a few of these, you'll start to know which ones you're going to need. Most of them make self-explanatory. For example, if it's in a flood zone, send the flood zone addendum. If it's not, don't send it. Here's your contact agent information. This lets everyone know who the AM is on the property, the listing broker, and the FSM. So we all are here to help you. If you got any questions, that's the numbers you would call. Property contact search. Here is where you go put in a case number to find whether or not a property is still on the market or not. And you will always find these properties listed in your local MLSs as well. So if you don't find a property on the website, go to your MLS. That way you'll know exactly what status the property is in. Find a HUD registered broker. This is where the general public will go to find you guys. And they can do so by clicking on the zip code, or they can put your company name in. If there's a broker that has multiple offices and he wants to have different NAID number for each office, the only way he's going to be able to do this, he's going to have tax ID numbers set up for all of those different offices. That's the only way he's going to be able to do it. If not, all his offices will have to come through him. Yes, Is
there a chance that we can become listing agents?
Well, we submitted over back in 2010. We submitted out a request for proposal, and we had hundreds of brokers submitted them over. We selected from that point, but we still welcome anyone that wants to submit a package over to submit one over. But there is no need at this point. But if the need arises, then your package will be there. Okay. The good neighbor next door. Here is where you would go to be able to find if a property has any of these special programs in a particular state. If it's a light shaded blue, that means that there is some properties under these special programs, such as the neighbor next door, the nonprofit, and the dollar homes. What someone can do is to go create a criteria, a search list of what you're looking for. Certain zip code area, square footage, price range, and you will get an email sent to you when a property meets your criteria comes available. And of course, you can save this property list as it grows. You can also manage it to where you can go in there and change the information of what you submitted in, and you can save it as well. This is just showing a map where the property is located at. This is the press room that you can go to. When you click on here, you're going directly over to HUD.gov. This will let you, where you can find all of the press releases, all of the testimonies, the news, anything that's new that's taking place with the Department of HUD, you can find it here under the press room. You can also go to this resource link. This resource link will let you know who the players are that will be able to assist you. For an example, if you want to know what's the FHA mortgage limit for a certain area, you can find it here. You can find out who are the FHA approved lenders, appraisals, consultants, housing counselors. These all can be found under the resource link here. Okay, these are some tips to remember. HUD advertising guidelines. The listing brokers do not have an exclusive right to sell agreement. So therefore, you guys can advertise on these homes just like they can. It's only two things that they can do that you guys can't do is to be able to place the homes in the MLS and also to put a sign on the yard. Other than that, you can advertise on them just like they can. But you do have to follow these guidelines if you decide to do so. First of all, in your advertising, be professional and ethical with your advertising. Be proactive. Always refer to a HUD home as either HUD home, HUD owned, or just for sale. Do not state repossess, foreclosure, must sell. Those are negative ads. Don't say that. Okay. Always use your equal housing opportunity logo or wording within your advertising. Do not advertise on the property until it actually is on the market for sale. Always be accurate with your advertising. For an example, if the house is priced at list price of $100,000, don't say, "Well, I think HUD might take $90,000. I'm gonna advertise at $90,000." Be honest with your advertising. And a lot of people think, "Well, why do I want to advertise on it? I'm not the really listed broker on it." Well, one or two reasons. One is you just might sell the property. There are selling companies that don't even list HUD properties throughout the country. Is selling a lot of these houses every day by being proactive and creative with their advertising. And sometimes you can just do simple stuff, but just do a mass market of it. It's a company out of Atlanta, Georgia. They sell so many of these HUD homes. They're not a listed broker. They do something as simple as they have little teenagers going to put signs up throughout the city, all over the city, and with an arrow pointing on the boulevards where the homes are located, and have their website address on there. And evidently they get tons of calls because they sell them that way. You can do that, but the thing about it is you got to be able to make sure that the city or the real estate commission or the other government agencies where you are is going to be okay with it. But HUD don't have a problem with your advertising as long as you follow these guidelines right here. Okay. And there's some companies will, they use blogs. They use different kinds of social media. And what they doing, even they might not sell the HUD home that they're advertising, but they're creating a pool of potential buyers by using the HUD properties to come to them, because everybody knows HUD properties are good deals. So therefore, the general public, they want to learn more and more about them. So by you saying you're the expert, they're gonna come to you. But it's gonna be up to you to be able to sell them once they come. Of course, do not destroy or damage anyone else's sign. I mean, you can hold these houses open as an open house if you choose to do so, but you have to let the listing broker know that you're going to be holding it open. The listing broker cannot refuse to allow you to hold it open, but it is on a first come, first served rotating basis. As far as inspections, your purchaser has the right to do any kind of inspection that they want to do on these homes, okay? Such as, mold, radon gas, any kind of inspection. Let me say this, if the home was built prior to 1978 and they're getting an FHA loan, it will be inspected for lead-based paint. Your purchaser can get a copy of this inspection report, but most of the time you guys won't even know that it's going on. But it will be inspected if it's an FHA involved. If there's treatment needed, as long as it don't exceed over $4,000, this will be done and paid for by HUD. If it exceeds the $4,000, then your purchaser will need to get a 203K loan. Then they will get a credit. They get a $4,000 check at closing, and then they will have to borrow the additional funds to be able to get the lead paint treated. When I'm saying treated, I'm not saying fully abated. I've been told by some experts in the profession that in order to be able to abate one, you have to take out all the wood throughout the house. They're not going to do that, but it will not be any flaking or peeling paint. But these are done by professional, trained, lead-based paint people. It's not just your average Joe painter out there. If your purchaser submits over multiple bids on the same property, whichever net HUD's the highest that's the one they're gonna end up purchasing. Okay? And it's the same applies if they submit over multiple bids on different properties, whichever net HUD's the highest, that's the one they're gonna end up purchasing. Yes, sir.
It doesn't have to be the one that is the highest. Is it gonna be the one that's the best? Because I
Which-
had multiple houses where I thought I was the highest, but they took another bid, so.
Okay, I mean, you say you thought you was the highest, the bid results are there.
Okay.
That's a good thing about it. There's no guessing on this, but no, whichever gonna net HUD's the highest. Yes, sir.
I noticed that with some of the last one, all of them, their daily bid, it kind of shuts up at midnight.
Yes,
So let's just say there are agents that work through the night and they submit that offer after midnight. Will the computer not receive that offer to the next morning?
That's correct.
That's
That's correct. If you notice on the website, it'll have a statement on there saying something as asset manager may have selected another bid or something like that. What that means is like you, at 12 o'clock midnight, it's going to cut off. Okay, no, if you submit a bid over after that 12 o'clock midnight, your bid is not going to be in on that day, but it's going to be in on that the next day.
It might be too late because they might already assess.
Exactly. And then also, you got to keep in mind, if it's a daily bid opening, you got to give the contract review department the time enough to review the bid and to pull it off. Yes,
This might be off topic, but how do I protect my investors? Because I had an investor, and it's in the guidelines. If anybody don't know this, that if you're an investor and you did accept it on a house, and you put your $500 money deposit, earnest money deposit, and they vandalized the house a day before closing. Just happened to me. They took the sink, the tub, the gas, the siding off the back, they took the shingles off the top of the house, and the guy really, they took the water tank, they took everything.
Okay.
And the guy wanted to back out, and HUD said you forfeit that $500 if you back out, if only you're an investor. And he was livid with me. And I tried to explain to him when he signed his paperwork, he was a young dude, he was trying to hurry me up, and I said, now look here, I have to redline this for you. He don't believe nobody would do that if they do all that. I explained it to him, and he called my office, called my broker, told him we were shamming him, he's calling a Better Business Bureau, he cussed out the girls and the receptionist, How do I combat that?
But it's, okay, first let me say this, everything is case by case basis, but he should have gotten his earnest money back. He should have gotten his earnest money back. Now, he said the day before closing, once he closes, it's his baby, huh? It hadn't closed.
He called me and he said, hey man, they down there ripping off this house now. I tried to chase them, and I went over there at 11 o'clock at night, and he was right. I had to take locks of my own to re-lock the house up, just so I can call the people to come out the next day. It took them a couple days to get out there, so we, pushed the closing back. But they did not give this man back his money, and he cussed me out for weeks after.
Mark, you got something to say?
Now, at that point, can he go back to HUD and say, hey, they just felt $7,000 for the damage, can you reduce my price by X amount, or?
Well, I mean, like I say, everything case by case basis, that used to happen quite frequently, but the economy changed, more properties, everything changes. The way it is now, if you want it, it's yours. If not, we'll bring it back to the market. You can rebid back on it, But it's case by case basis. Sometimes HUD will offer a small credit. It's not going to be much though. It's not going to be much at all because the way HUD look at it is that, for example, if somebody steals the air conditioning unit, you might get $400 because HUD figure that's all it's really worth. It's been there 15 years.
I had a situation like that about a year ago, but they did credit everything it was needed.
Right. That's the reason.
Hot water tank, furnace. I mean, they gave her credit as well.
Right. That's the reason. Yeah, I mean.
Occupants can do that. They get their money back. Investors, they told me no. They told my broker.
Phil, you got someone there?
Every investor we've had in your company has always got the money back or a credit of some sort.
Yeah, that's really that's kind of new to me what you're saying because it has been to where the amount of company flies. I'm going to say this that's the only way investors get their money back if the condition of the property changes. So yeah, I don't know how to check on that one. Yes, sir.
I had an investor that wanted to see how the
Well, the property condition report, let them know this is not a full whole house inspection, but this is just to inform them of the condition the property was in when it came in inventory.
Okay, and that's available to any?
Sure, that's online, yeah.
Okay.
Sure it is. Yeah, PCR, property condition report. Yeah. Okay, but like I was saying, though, you know, what I was talking about right here, a lot of people, once they find out they're approved to purchase a property, especially if they're first-time home buyers, they get anxious, they get antsy, so they say, well, okay, I'm going to bid on this one, this one, this one. And then they think they can pick whichever one that they want, but they can't do that. You got to, whichever going to net HUD the highest, that's the one they're going to end up purchasing. Okay, this counter offer that I was mentioning about, you know, like I say, you will get this if it's within reason, case by case basis. I'm not guaranteeing you're going to get it every time, but you should get this if it's close to the threshold. Okay, backup offers, we've already talked about that. You know, only if you check, I think line number 10 of the sales contract stating that you do want it to be a backup offer. And if it's on occupancy, like I mentioned, I would always check that, because you know, if you don't want it at that point, when you receive that email, just reply back and say, do not want it, and then, you know, there's no harm, no foul. We'll just go to the next bidder. Closing extension policy, your purchaser will be given 45 days to close. If they don't close within those 45 days, they can purchase extensions, okay? In order to be able to get the extension, they're gonna have to have that extension form over to the closing agent's office at least by 5 days before it closes. Also, a letter from the lender, if there's financing involved, stating that closing is imminent, just need a few more days to be able to get processed the loan, okay, along with the extension form. The appraisal request, if it's an FHA loan, your lender can get a copy of the appraisal. They have to use the appraisal that's already been done. We have to do appraisals every 6 months. Unless the property's under contract, then it's going to be at your purchase expense if it's been ratified and the contract expired and the appraisal expired. But they can get a copy of it if it's an FHA loan. If it's convention, it's not going to help them either. The earnest money. If the home is priced at $50,000 or below, the earnest money is $500. Anything over $50,000, the earnest money is $1,000. If it's a vacant lot, it will be half price of what the lot is, and they will be considered an investor because there's no home to live in. Okay, forfeiture of earnest money. HUD is not trying to take anyone earnest money, but got to keep everyone honest. So if it's an investor, if they place their bid on a property and they don't close on this property, they're going to lose their earnest money. Okay, the only exception to that is that condition of property changes. or it's some kind of cloud on their title where HUD cannot close. Other than that, they're gonna lose their earnest money. A lot of people think that's hard, but I'm telling you why HUD started doing that. Years ago, what investors would do, they would place bids on HUD properties, and then they would start advertising them to try to find a buyer for it, you know, while it was still in escrow. If they could not find a buyer for it, they would just tell HUD, nah, I changed my mind, I don't want it. HUD would give them their earnest money back. So the department was just spinning the wheels. So they said, well, okay, if you're gonna play that game now, it's gonna cost you your earnest money.
Could it be something with the guy, because he had other investment properties? Could it be something with his social security number?
It could have been. It could have been.
Okay,
yeah.
That's why I didn't trust him.
Yeah,
After a while, the car, somebody else offered him one you've been with.
Right.
So then I told them, don't do this guy, tell him to give him a different realtor and give him the company, whatever house he called, and gave him his realtor's company.
Right, because I've heard of a lot of things, and I'm sure you guys have too, but if there's investors out there, they'll have a contract on a house, they'll go vandalize it themselves. They'll go steal the air conditioning unit and take it to another one of their houses, then tell HUD, I need an air conditioning unit. So he could have been one of them situations that, you know. But anyway, as far as the earnest, if it's an owner occupancy purchaser, if they can't close on the property due to a death in the family, a loss of the breadwinner, a loss of a job, one of the breadwinners in the family, or they've been turned down for a loan by a HUD direct endorsement lender or any reputable lender, and they got proof, they're going to be able to get their earnest money back. But they're going to have the documentation. It's an old saying, documentation beat conversation. You can't just try to talk their way, they're going to have proof. Okay, but if they submit a bid on the property, this is an example, and say for example, the home needs a roof on it. It's on the property condition report, it's on the appraisal, everyone knows the home needs a roof. Then they wait 30 days and say, I don't want to purchase this property because it needs a roof on it. They're going to lose at least half of their earnest money. They could lose all of it, but at least half of it because they basically just had the property off the market for no reason. And like I said, vacant lots, they will apply as an investor. They're going to lose their earnest money if they don't close on vacant lots. Yes, Ron.
Sometimes it's not on the PCR, but then when the city does an inspection, they're requiring more repairs than were on that PCR. Is that going to allow the purchaser maybe to be able to say, well, it's more work than I thought it was, I'd like to be able to back out and get the earnest money, do you think?
No, but the reason being because these homes are sold as is. HUD's not giving any kind of warranty written or implied, so HUD is giving them the opportunity. The only thing the property condition report is doing is just letting them know, this is what we see, what's wrong with it. It's up to you to do your due diligence to find out if anything else wrong with it. But if you do find out there's something else wrong with it, we're not going to give you your earnest money back just because you found it out. But this is the way around that though. If someone getting a loan and if the lender will not loan the money because of that, then only thing once they get the denial letter, they get their earnest money back. But if it's a cash sale involved, then it's not going to really be. Let me say this though: everything is a case by case basis. If it's it's going to have to make sense. If it's something really major, yes, it's a possibility. But if it's something minor, no. In other words, if it's like it was an old well that's contaminated in the back or something, really major, Okay. As far as the closing extension fees, here in Michigan is going to be $150 for 15 days on all properties, regardless of the price. Okay, and that's in 15-day increments. If they don't close within those 15 days, they will be prorated the amount of days that they did not use. Let them know. They can get sometimes 2 and 3 extensions. There is no guarantee if they get 1 extension that they're going to be able to get the next one. So they're taking a chance. It's been situations where people will buy 3 or 4 extensions and they're paying for extensions, they're paying for appraisal, inspections, and it can get to be expensive, and sometimes they lose their money. So you guys as professionals sometimes have to step in because when you purchase a home to live in, it's emotions involved, and people get attached to a property. Sometimes it's not going to work for them. So the lender or you guys got to step in and say, look here, this is your 3rd extension. There's no guarantee. You might want to just try to find another home, or either just go talk to this housing counselor or something because it's costing you money. And I don't think it's going to happen, because most of the time, if it get down to that 3rd or 4th one, a lot of times they do not close, unless there's, some extenuating circumstances.
The extension is when it's their fault, right? The purchase.
Yes.
Because there's been times when it was the city's fault that it went for a very long time, and we had to, call them and let them know, you can't charge my client this because they're ready to close, and we have to get the package back from, city side. Just happened on a house, and it took 6 months. They couldn't get the ACR. Something with Detroit City couldn't get their stuff together. And this lady called me every day, cussing me out. My broker did call. They got it down. That they did.
Right. Now, see, our listed brokers are instructed to get these point of sales inspections done as soon as they get these properties in inventory. And some of the times we realize that, local municipalities can be difficult to work with sometimes. But if it happens once every blue moon, then we understand that, but it cannot be happening on a regular basis. If we do, then something's not right.
It was the city of Detroit.
Right.
Didn't get the deed, and they couldn't package it. And they just kept giving us the runaround. So then I had my broker call. So then she called City Side, and they stopped all the extra extensions and all that kind of stuff.
Okay.
It wasn't our fault.
Right, everything's case by case basis, okay. Access to the property. These homes, a lot of them should have lock boxes on them. You guys can take the HUD keys, put them on your key ring if you like. Right now it's about 7 HUD keys, you know. It used to just be one. 2010, HUD decided, say, well, we're gonna try to cut down on the vandalism. We're going to basically try to fool the people. We're gonna put more keys out there, okay? But unfortunately, like I say, these crooks in the business, they sit back, somebody want to sell HUD home. These agents I'm speaking of, they're like, come on to my office, I'll give you a key. And then now they got all 7 of them. So what I suggest you guys do, if you know somebody doing that, you really need to turn them in, because what they're doing, they're making it hard for you all. They're making it dangerous for you all. Because the last thing you want to do is to walk in one of these houses, they gave a key to somebody in a drug dealer or something in there, or prostitution ring or whatever. You walk in there, so turn them in, you know. And also, when you go into these homes, please do not leave a business card. These homes are vacant. There's no need to use a business card because the FSMs come in and just going to trash it. Make sure that the property is secure when you leave. That way, it's trying to keep the criminals out. So we try to make sure all the doors and windows locked when you leave. Anytime someone goes to one of these properties, unless they are HUD approved contractor, investor, HUD approved contractor or appraiser or inspector, you all need to go with them. Yes,
Now you said don't leave your business card. Are we still required to sign the sheet?
Yes, you do need to sign in. I skipped that one. That's the very first one. Sign in. And that way, everybody knows who's visiting the property. And if something happens, you know, then we'll know. It was even looked at as far as, you know, putting electronic lock boxes on them and then try to monitor it that way. And then we found out that they were still in the lock box. So, you know, that could really be a big waste there. You know, so, you know, you guys got to be the eyes and ears out there in the field to try to, you know,
Talk to the neighbors.
yeah, try to keep the bad element out of the business. I always tell them, have them go sell used cars or something.
Okay, I have a question. It's a little bit off the subject, but for condominiums, we have a condo that's listed. We're the listing broker for the condo.
Okay.
It's subject to close in 2 days.
Okay.
The title company's calling us. Whose responsibility is it to get the HOA and pay for the status letter and all that information? Because we've been having a hard time locating the condo association.
Right. Well, I would say this right here. It's really everybody needs to be working together. Okay. The listing brokers are there to assist. We're there to assist, but you guys also, as the selling agents, need to try to, you know, be a little proactive too. And I know sometimes it can be difficult, but if you run across a situation like that, let us know, and we will hunt them down one way or another.
Okay, but who pays for the status letter? Is that the listing broker or is that the selling broker?
That would be the selling broker. Yes. In other words, whenever you're purchasing a home, any kind of due diligence that they need to do to be able to get in this home, that's going to be their expense. Okay. Yes, somebody said.
I think the multiple inspections that we're doing now are cutting down on the crime. And
yeah.
I mean, people see we're in the house in and out every day or every couple days. I think that's really cutting down.
That's good.
On a lot of the vandalism.
That's good. Yeah. Yeah. Okay. As far as contract corrections, I mean, you're going to be given 2 days to get your contract in, or if there's any corrections that need to be done. You're going to have to get those corrections in time, 24 hours. Sometimes we can give you 48 hours just over the weekend. We're trying to work with you, but you're going to have to, be proactive as far as getting us the documentation that we need to go ahead and move these properties. Please, on these contracts, do not put any white out on them, or do not put a line through them and try to initial them. It do not work that way. It's got to be the original documents. It's got to be signed, and the contract got to be signed in blue ink to where everybody knows it is the original. On the style of the contract, line 2, please put how they taking title to the property, tenants in common, joint tenancy with the right of survivorship. Change in financing. If someone gets a loan, well, they state they're going to get an FHA loan initially, and if they change their mind and decide not to get an FHA loan, they're going to have to reimburse HUD at closing on some due diligence which HUD is paying to have done, such as treating for termite, treating for lead-based paint. So these are items that the purchaser probably want to have done anyway, so let them know if you decide you're going to get an FHA loan, if you change your mind, be ready to reimburse HUD on this expense. Okay, I don't know why, but some people, when it's a HUD property, when they have the winning bid, they feel like they can go ahead and start working on the property. Please let them know it's not their home. They can't do any work on it. Okay, this is that property condition report someone was asking about earlier that you can give to your purchaser. Okay, but just let them know when you give it to them that this was the condition of the property at that time. You know, please always make sure that you let them do a final walkthrough the day of closing, if no later than the day before, to make sure the property is in that same condition. This is the sales contract, and you know, I always tell people, if you can fill out a contract that an attorney has drawn up, or either from a board of realtors, this one is easy because you got your contract and you got all your other addendums are going to be separate. You know, the biggest problem which we see with these most of the time, make sure that on line number 1, with the purchaser's name, line number 1, line number 2, and line number 13, it needs to match. Please do not let them start out by using one name and then they get down here at the bottom, they will start wanting to use their nickname or something. Make sure it matches. Okay. Unless it's a company. If it's a company in line number 2, they can take title in their company's name on line number 2. Okay. Like I say, other than that, just make sure all the documents, make sure all the lines are filled out. Right here, where it says purchaser is, if they were buying a home under one of the special programs, you would go ahead and put the discount amount right here of 50%. And then you would put what type of purchaser they are. Okay. Make sure that you put your name as the selling agent if you're not the broker, because if we need to get in contact with somebody, we need to know how to reach you. Put your name as the selling agent here. Make sure you put your broker's name number, and the rest is self-explanatory. The addendums.
Jason,
yes.
Can you go back to that one
sure.
slide? Because you know, I've got a lot of my agents, they'll put their names in there, but they still have me sign as the broker. Is that correct?
That's correct.
Okay.
That's correct. Okay. Okay. Like I said, if the, you know, some of these addendums we don't need. It's property specific. 203K, we don't need it unless they get a 203K loan. Forfeiture earnest money policy. Please make sure they're aware of this. Make sure they sign the forfeiture earnest money policy. Lead-based paint addendum only if the property was built prior to 1978. Owner-occupancy certification addendum. You always need this addendum if they're going to live in the home as their primary residence. Radar and gas mold notification will always need to be in the package. If they're overbidding higher than their appraised value, make sure this addendum is in there. And the reason this addendum came about because there were agents out there. This was back before the computer. This is back when you selling a HUD home and you got a little book mailed to you that let you know what property you go sell. Let you know how old I am. But anyway, what agents would do, they would take and find buyers, and they would take an example. If the house is $50,000, they'll tell the buyer, HUD won't 55, where they would have the opportunity to be in the winning bidder. And so HUD said, well, okay, now let the buyer sign this addendum. That way they'll know what the real asking price is. They'll know that they're overbidding. Okay, inspection to the addendum will always need to be in there. For your protection, get a home inspection. This addendum do not have to be in the package anymore. But just make sure that they are aware of this. A lot of agents, a lot of purchasers, they think that when they look at an appraisal and they see something on there about the repairs, they say, well, I'm not gonna spend my money. The appraiser already done it. or they look at property condition report, let them know. I mean, it's your choice whether you want to do it or not, but neither one of these are appraisers. They're not, our inspections, full whole house inspections. They're not going in the attic. They're not checking every recyclable outlet and doing the things that an inspector would do. So kind of let them know that. This is just a check sheet right here where you can go and check, make sure you dotted your I's, cross your T's. And make sure that the contract gets signed in blue ink. If it's not in blue ink, then it will be returned. Is there any more questions? Yes, ma'am.
I have a question about, or actually maybe it's an observation. Custom, we have two closing people that do closings in this area.
Yes,
Custom
ma'am.
Closing and Extigo Title. Custom Closing moved all the way out to Novi, which is not a hop, skip, and a jump from this side of town. And they love to tell me, oh, but we're close. They don't want to come out and do closings on the east side. Can we select or request who our closer is?
You can do so. You're not required to use HUD's closing agent, but what's going to happen is if you use another closing agent.
No, I just want to use that
She wanna use Extigo.
I got you. Oh, you want it? Oh, yeah. No, unfortunately, you cannot do that. Unfortunately, you cannot do that. It's whichever one is assigned. Whichever one is assigned that particular property.
You gotta use it.
Yes, yes, sir.
I didn't hear you mention anything about title insurance, but isn't it true that HUD doesn't provide owner title insurance?
No, that will be up your purchase expense to purchase their own title insurance. And please encourage them to do that, because a lot of buyers, they don't know to do that. Yeah. Yes.
You can ask someone from the closer to, like you said,
Come out?
you can ask them to come out. If they require to, if you request them to come to your office.
No. It's gonna be at their discretion where they close it at. Yeah. Yes, ma'am.
On bids that are in the backup status, is there any way you can know how far down they are on the chain of that?
No, ma'am. Unfortunately not. No, ma'am. Yes, sir.
When you go to the HUD Homes store, what category do you click on to come up with a packet and all the addendum forms?
Okay, to come up with the package and addendum forms.
You know when it tells you you're accepted, now go to the HUD Homes store and get your packet.
Chance, where you go?
Details.
Under your confirmation, put in your confirmation number, then it gives you all your forms right there.
Thank you. When you
It's either
okay,
Extigo or Custom will send you that.
yeah, but he wasn't talking about he wasn't talking about that package. He was talking about
I'm talking about the last time I did a deal with City, you know, then you get accepted, now it tells you have to complete all the forms in the packet.
Oh.
Go to HUD Home store to get the printout.
Yeah, but you gotta, but in that email, can you get your confirmation number? Input that confirmation number and it puts you right there with all the.
You have to log into your HUD Home store site.
right. Yeah, like I said, log in, put that confirmation number there. It's gonna give it to you. Okay. Thanks, Chad. Any more questions? Well, if there's not any more questions, we thank you guys for coming. Y'all have a great day.